Is apart from the reviewing the memorandum records, auditors should verify that the intergroup transaction account balances has been eliminated. Verify that consolidated financial statements have been prepared using the uniform accounting policies from the transaction and other events in similar circumstances. Verify that adequate disclosure has been made in accordance with Accounting 721 in the consolidated financial statement and applicable different accounting policies in the case. It was impracticable to harmonize them. Apply a requirement impractical when an entity cannot apply it after making every reason affordable to do so. But while preparing the cash flow statement under NDAs, auditors should ensure that profit adjustment are made to their group of members and financial statement is prepared in the consolidated financial statement to ensure that uniformity in the bank groups of accounting policies in accordance with the NDAs maintained. So, accounting standard 21 AS 23 AS 27 permits application of different accounting policy. If an impractical to use a uniform applicable accounting policy, the fact should be disclosed as to the in the proportion by items in consolidated financial statement to which the different accounting policies has been applied. The NDA is 28 permit that the financial statements and associate can be prepared using a different accounting policy. If the impractical to do so, as however adjustment can be made to make an accounting policies conform to do this parent where the different financial statements are used by a parent in applying making equity method. Perform adjustment made in harmonize different accounting policy include adjustment made with the management to convert the component of financial statement prepared under the component of GAAP and to GAAP under the consolidated statement prepared. Verify the calculation of minorities of non-controlling interest. Verify the adjustment relating to the deferred tax on the account of temporary difference arising out of the eliminating of profit or losses result from the intergroup transaction where the parent accounts are maintained in India. Verify that income and expenses of a subsidiaries are included in consolidated financial statements from the date in gain control until the date in entity ceases to control the subsidiaries and further such incomes and expenses based on the amount of assets and liability recognized in the consolidated financial statement on acquisition of the auditor should gain an understanding of the procedure adopted by the management of the enterprise to make the above mentioned adjustment. They help the auditor to reduce the audit risk to acceptable level. One of the important adjustments that may be required to the current period is determine the impairment loss that may exist on the goodwill rising on consideration. Goodwill rising on the consolidation is carried on the value determined at the date of acquisition of the content, and the same is to be tested for the impairment loss at every balance sheet date. Auditor should examine whether any impairment loss has been determined by the partner. If yes, auditor should examine the procedure followed by determination of the impairment loss. Auditor should satisfy himself that the amount of impairment loss determined is fair. In the case of impairment losses, the goodwill of the component has been determined in foreign currency. Auditor should verify if any amount of the losses in local currency need to be adjusted for the currency translation reserve on the amount of movement of exchange from the date of the goodwill for the first accounted for the consolidated financial statement is apart to the date of determination of impairment loss. Auditor should also perform audit procedure to understand and verify the intergroup losses and indicates impairment loss and require the recognition in the consolidated financial statement. Apart from verifying the calculation and disclosure required by minorities and non-controlling interests has been appropriate, auditors also determine in the case of minority interests, shares of the losses, excess minority and non-controlling interest, share of identities, and excess of a further loss applicable to the minority interest has been accounted for the accounts with the relevant accounting standard. The financial statement of the component used in the consolidation should be drawn up to the same reporting date as that of the parent. It is not practical to draw up the financial statement of one or more components in such a date. According to the financial statements are drawn up at different accounting dates. Adjustment should be made to the effect of significant transaction or events that has occurred between the dates of the parent financial statement In the case of different groups of reporting date should not be more than 6 months in the case of financial statement under the AS and 3 months in the case of NDAs. The auditor of the consolidated financial statement should review other components resulting between the financial reporting date and the parent of a significant transaction or other event that has been taken during that period, and therefore need to reflect it in the consolidated financial statement. The recognition should be given by disclosure. Otherwise, the effect of interviewing the events and material effects of financial position resulting from the operations of cash flow. The fundamental accounting assumption of consistency required the auditors of consolidated financial statement to consider whether the length of the reporting periods or any difference in the financial year ends at the same as a period end. If there has been a change in the respective reporting period of a component, including consolidated financial statement, have been materially affected the financial statement, the auditor should ensure that the entity discloses such changes at the manner as treated of financial statement. The Ministry of Corporate Affairs has issued a circular number 39 2014 dated October 14, 2014, stating that the Schedule 3 and the Act read with the applicable accounting standard does not envisage that company will prepare with consolidated financial statement, merely repeating the disclosure made by man under the separate financial statement during the consolidation. It is a consolidation financial statement. The company would need to give all the disclosure relevant in the consolidated financial statements only. Further, the accounting statements NDAS 21 also lays on certain principles. They should be observed while giving the information which part of separate financial statements and the components, but they need not to be reported in the notes and other explanatory statements of the consolidated statement. The auditors should examine the notes required by the applicable standards, which is necessary for presentation true and fair view of the consolidated financial statement have been included in the consolidated statement as an integral part, and examine the additional statutory information disclosed in separate financial statement of the statutory and all the parent having bearing on true and fair view of consolidated financial statement have been disclosed in consolidated financial statements. In addition to the information required pursuant of Section 2 of Companies Act, general instruction for preparing the consolidated financial should be disclosed. Example: the following information are required to be disclosed in the consolidated financial statement separately from the parent and each of the component, including foreign component, which is to be consolidated. Amount of net asset and net asset is a percentage of consolidated net asset. Amount of share of profit and loss and percentage of share of profit as a percentage of consolidated profit. Amount of comprehensive income and a percentage of comprehensive income as a percentage of consolidated OCI. As a record of the consolidated adjustment, including elimination of intergroup transaction, it would be ensured that they are either disclosed as a single line item or separately adjusted in information of net asset disclosed for the parent and each company. NDAS 110 does not give a list of information which is part of the separate financial statement the component but need not be reported in the note of explanatory material of consolidated financial statement. However, based on the section 129.4 MCA circular 139.4 as a referred above, it is to be the construed it is can be construed that even in consolidated financial statement under NDAs only those disclosures should be given which are relevant to the consolidated financial statement. Based on the above discussion, in the case of companies, the information such as following given notes and separate financial statements of part and subsidiaries need not to be included in the consolidated financial statement, the source of which the bonus share issued. Example: the capitalization of profit and reserve for the securities or security claim. Disclosure of all unutilized monies out of the issue indicate the form in which unutilized fund has been invested. Disclosure requirement of Micro Small Enterprises Development Act of 2006. The statement of investor whether it's shown as a financial asset or non-financial asset. as a stock interest, separately classifying the trade investment and other investment shown the name of body corporate and indicating separate names of body corporate under this name management, where the share of a debenture investment has been made, including all investment whether or not made subsequent to the date at which previous balance sheet is made out, and the nature and the extent of investment is made to each body corporate. The value of imported calculation CIF based on the company during the financial year, raw material components and shares and capital goods. Expenditure in foreign currency during the financial year on the account of royalty, know-how, professional and calculation of fees, interest fees and matter. Value of all imported raw materials, spare parts and component consumed during the financial year. The value of all the integers, raw material and special parts and components assembled or consumed, the percentage of each of the total consumption. The amount remitted during the year in foreign currency in the account of dividend with a specific mention the number of non-resident shareholders, the number of shareholders has been the dividend due to the year end of the final dividend rate. The owning of foreign exchange classification based on the namely export of good calculated FOBs, royalty, know-how, professional consultancy fees, interest and dividend, other income indicated in the nature of the refer. However, notwithstanding the above, the auditor need to ensure compliance on the disclosure requirement on the applicable accounting standard and other applicable law for consolidated financial statement. Management representation. Section 5 SA 518. Management representation requires auditor to obtain written representation of the management and other and whether appropriate those charged with governance. The auditor of the consolidated financial statement should obtain evidence that the management of the parent acknowledges its responsibility for a true and fair presentation of consolidated financial statement in accordance with the financial reporting framework applicable to the parent and the parent management approving the consolidated statement. In addition, the auditor of the consolidated statement obtains a written representation from the parent management on the matters and materials into a consolidated statement. Examples such representation include completeness of the compounds or CFS, identification of a reportable segment from the segment reporting, identification of related parties or related by transaction reporting, appropriateness of completeness, permanent and current period consolidation adjustment, including elimination of intergroup and transactions. Yeah. Tax. Reporting. There could be two situations in the audit of consolidated statement where the parent auditor is also the auditor of all the components to be included in the consolidated financial statement. When the parent auditor is not auditor of one or more component and therefore uses the work of another auditor, the auditor should, while preparing the report, consider the requirement of standard SA 700, forming an opinion and reporting on the financial statement, SA 705, modification to the opinion during an independent audit report, and SA 706, emphasis of matter paragraph and other matter paragraph in the independent audit report. Where the auditor uses the work of another auditor in the audit of consolidation and statement is required, SA 600, using of the work of another auditor should also be considered. Reporting, where a parent auditor is also the auditor of the whole component. Reporting, when the parent auditor is not auditor of all the component, when the components audit report on the financial statement under the audit accounting framework different from the parent, when the component audit report is under the auditing framework different from the parent and component is not audited, when the parent audit is also the auditor of the component. While drafting auditor should report whether the principles and procedure for preparation and presentation of the consolidated financial laid down in the relevant accounting standard has been followed. In the case of any departure or deviation, auditor should consider requirement to give SA 705 modification to the opinion of independent auditor report in an audit report. As a user of the consolidated financial statements aware of this deviation, auditor should issue an audit report expressing an opinion whether the consolidated financial statement gives a true and fair view of the state and affairs of the group on the balance sheet, as to whether the consolidated profit and loss statement gives a true and fair view of the result of consolidation of profit and loss of the group for the period under the audit. Where the consolidated statements also include a cash flow statement, auditor should also give his opinion on the true and fair view of the cash flow presented by the consolidated cash flow statement. When the parent auditor is not auditor of all the component, in the case of the parent auditor is not the auditor of all the component, including the consolidated financial statement, the auditor of the consolidated financial statement will also consider the requirement SA 600 and in the prescribed essay 6 not 706 modification opinion, if the auditor considers it necessary to make a reference to the audit of other auditor, the auditor report on consolidation, the financial statement shall disclose clearly the magnitude of portion of the financial statement audited by the other auditor. It may be done by stating the aggregate rupee amount and percentage of total sales, but otherwise a percentage of revenue and percentage of cash flow component included in consolidated financial statements are not audited by the parent auditor. The total assets, total revenue, total cash flow is not audited by the parent auditor. Should be presented before giving effort to the permanent and current period consolidated adjustment. Reference to the report of the auditor on the consolidated financial statement to the fact that the part of the audit of the group are made by another auditor. It's not constituted as a disqualification opinion, but rather as an indicating of the dividend divide responsibility between the auditors of the parent and subsidiary auditor. When a component auditors report on financial statement under the accounting framework different from that of the parent may have the component located in multiple geographic outside India, applying an accounting framework gap that is different than the parent is preparing the financial statement. The foreign component prepared financial statement using a different financial reporting framework, which may be well known such as US GAAP or IFRS. The local GAAP of the jurisdiction of the component. The local component auditor may be unable to report on the financial statement prepared using the parent GAAP because of its unfairly with such GAAP. The component of financial statements are prepared under the accounting framework that is different than the framework used by the parent and the parent preparing the group consolidated statement. The parent management will be performing conversion of the component of audit financial statement from the framework using the component of framework under the consolidated financial statements of prepared. The conversion adjustments are audited by the principal auditor to ensure that financial information of the component is suitable and appropriate for the purpose of consolidation. The components are made alternative prepare financial statement on the basis of a parent accounting policy. So outlay in the group accounting manual to facilitate the preparation of the accounting consolidated financial statement. The group accounting manual should not only contain all the accounting policies, including relevant disclosure requirement, which is consistent with the requirement of financial reporting framework under the group consolidated financial statement. And the statement is prepared. The local component auditor can then audit an issue, an audit report on the component of financial statement prepared in accordance with the group accounting policy. When applying the appropriate use of GAAP accounting policy as the financial accounting framework of the component to audit under the principal auditor should perform procedures necessary to determine compliance of the group accounting policy like GAAP applicable to the principal financial statement. This is to ensure that information prepared under the requirement group accounting policy will be directly usable, relevant for the preparation of consolidated financial statement by the parent entity, eliminating the need of auditing by the auditor. The difference because the basis used by the component of financial institution and the non-consolidated. The principal auditor can decide whether or not to rely on the component of audit report and make reference to it in the audit report on the consolidated statement. When the component auditor and the auditor firm are different from that of the parent. Normally, the audit of the financial statement, including consolidated statement, are prepared under the audited standard generally accepted in India. In order to maintain consistency, the accounting framework enable the parent auditor to rely on the auditor in the audit report on a consolidated statement. The component of financial statement should also be audited in the framework that correspond to India's component non-audit. Generally, the financial statement of all the component including consolidated financial statement should be audited and subject to the audit procedure in the contents of multi-location group. Such audit and audit procedures can be performed by the auditor performing on the consolidated financial statement or by the component auditor, where the financial statements of one or more component continue to remain unaudited. Auditor reporting on the consolidated financial statement should consider unaudited component in evaluating the possible modification to this report on the consolidated financial statement. The evaluation is necessary because the auditor or other auditor in the case may be have not seen able to obtain sufficient appropriate audit evidence relating to such consolidation amount balances. In this case, auditor should evaluate both quality, quantifiable and quantitative factor and possible effect of such amount. Affect such amount remaining unaudited when the reporting on the consolidated statement using the guided provision SA 705 modification of opinion in the independent auditor report. CE Kanchal is nearly completing the auditor consolidated statement of Rupic Paints and Chemical Limited. She requires a written representation of management. As a matter of that consolidated statement, that specific matter as a written representation can be included. Just to understand. Ce's auditor consolidated statement and DA Limited. The consolidated statement of the subsidiary audited by the other audit. Consolidated statements auditor report subsidiary has been furnished by DD Limited. The total is 1,000 to 20,000 and flow cash flow 10%. Whether a parent decided to or required to prepare a present consolidated statement, it should do so on accordance with the requirement of applicable accounting account statement under the relevant financial reporting framework. Accounting Standard 21, Consolidated Financial Statement, Indian Accounting Standard AS10, Consolidated Financial Statement laid on principle and procedure for presentation and preparation of Consolidated Financial Statement as in AS and NDAS respectively. Consolidated financial statements are presented to the extent possible in the same format as adopted by the parent or prepare separate financial statement. According to Section 129.3, the Companies Act was something where the company has one or more subsidiaries, including associate companies and joint ventures, and shall, in addition to its own financial statement, prepare and consolidate a statement of the company and all subsidiaries of same form and manner as may form. Section 129.4 said provide the provision applicable to the preparation or adoption or audit of financial statements of the holding company shall this shall apply to the consolidated financial statement. Responsible for preparation and presentation of consolidated statement, among other things, is the management of the parent. The principal auditor of the consolidated financial statement is responsible for expressing opinion on whether the consolidated financial statements are prepared on all material respect in accordance with the financial statement under the parent prepares a consolidated financial statement. In addition to the reporting on the additional matters and required under the Companies Act 13 and all other statutes of the extent applicable. Standard on auditing, statement of guidance note on auditing matters issued by the Institute of Chartered Account of India apply in the same manner to the audit of consolidated financial statement as they may to the audit of the standalone financial statement. When an auditor accepts an audit of consolidated statement, auditor should access whether based on his work alone he should be able to express an opinion, true and fair view presented by the consolidated statement. If the auditor is of the view that his own participation may not be enough or sufficient, he should consider using the work of another auditor SA 600. Before commencing an audit of a consolidated financial statement, auditor should plan his work to enable him to conduct effective audit in an efficient and timely manner. A special consideration like permanent consolidation adjustment and current period consolidation adjustment need to be taken into account while auditing the group financial statement. The permanent consolidation adjustment or the adjustment that are made only on the first occasion and subsequent occasion in which these changes in the shareholder of the particular entity is consolidation. The examination determined and the goodwill of the capital reserves and equity attributable to minor shareholder. Current period adjustment or the adjustment are made in the accounting period for which the consolidation of the financial statement is done by eliminating the intergroup transaction account balances. That should be true situation in the audit of consolidated statement. When the parent auditor is also the auditor of the component to be included in the consolidated statement, and when the parent auditor is not auditor of another consolidation, therefore uses the work of another auditor in audit. The auditor should, while performing the report, consider the requirement of standards on SCA 700, forming an opinion on the report of our statement SA 5 modification opinion of independent auditor report SA 7 knowledge emphasis on the matter paragraph. Other matter paragraph independent audit report. The auditor uses the work of other auditor and the auditor consolidated statement SA 600 using the work of other auditor. When the financial statement of one or more component continue to remain unaudited, the auditor reporting on a consolidated financial statement, you should consider unaudited component in evaluating the possible modification in the report on the consolidated financial statement and evaluate the necessary because auditor or other auditor in the case may not be able to obtain sufficient proper audit evidence relating to which consolidated financial statement. Thank you.